Hello, everyone. Let me know if you can hear me. I'm wanting to make sure that I'm actually in the correct room and you guys can hear me on all platforms. So let me know, drop where you are listening from, what area you're in, if it's cold there, if it's hot there. If it is hot there, I will be jealous. Drop it in the comments. Can you hear me? Wanting to make sure you can hear me. Fort Worth, nice. Okay. Austin, nice. Some people from Texas. Okay. Yes. Sweet. We will give a few seconds for people to join. Getting on. I try to be prompt, so I did start at 4 p.m. sharp. Nice. Some Georgia people. It's warmer weather there. Yeah, I think it's a little bit warmer here. But there we go. Thank you, Tyler. I'm not tiny anymore, apparently. Okay. It's going to storm tonight. So New Mexico. Yes, please don't tell me how the weather is in Orlando. I know. I already know. Okay, well, let's get started. So this week I am wanting to talk to you about if you've ever seen somebody comment on these Facebook groups like I did a 10% DSCR loan. And you're probably like, well, that person's a troll. Well, they are either A, troll, yes, or B, they did this type of loan I'm going to explain to you in detail today. And they just maybe either don't know how to explain it to you, or they don't even realize that that's the type of loan that they actually did. So I'm going to pull up this and add to the stage. Okay. Make sure you guys can see the slide. Tell me if it's too tiny. I think it's okay. So what is needed? Hello, guys. Hey. Find a property that needs to have minor or major renovations. Doesn't matter what it needs. I don't care if it needs an awning. I don't care if it needs a whole new rehab from the ground up. Estimate how much the renovations will cost. Then estimate what the ARV is. So if you've heard that term and don't know what it is, ARV stands for after renovated value. So after you've made your renovations, estimate what do you think that appraised value is going to be. If you don't know, you can get the help and advice from realtors in the area that know the area very well. So this is the first thing that you will need. Second thing, how it works. If you can get at least 75% ARV again after renovated value, you can potentially put just 10% down. Yes, I have clients that are doing this right now with us. I don't want you to get confused by the math, so I am going to break it down for you in a simple way. You get 100% of the rehab cost given to you. So whether or not you want to finish it as a porch, whether you want to redo it from, the joists and everything like that, you can do that. You get 100% of that renovation cost without you having to come out of pocket for that cost. You then refinance out into a DSCR loan at the new value. You will still be in the deal with only 10% down payment. Well, Brenna, don't I have to wait until I get income on the property to do a DSCR loan and refinance out? No, you do not. Okay. If you guys know me and know me well, you know that DSCR is our bread and butter. We are, I believe, still the #1 brokerage in the U.S. for DSCR loans. Fun fact. So no, you do not need to show actual rental income on it when refinancing into a 30-year amortized loan. I will be answering all of your questions at the end, by the way. So you can put them in the chat if you want, if you think you'll forget your question. But if not, you can hold them till the end, and then I'll have a live Q&A. The math, okay? Let's say the purchase price is $500,000 for simplicity purposes. Renovations will be around $100,000. Let's just say that. Total acquisition costs. This means your purchase price plus the cost to renovate. $600,000. Okay. ARV, remember what that means. What the appraised value will be after you renovate it will be around $735,000. 75%. Remember I said the ARV, if it can hit 75%, 75% of that $735,000 is $551,250. So it is hitting $551,250 is the maximum loan amount, including renovation costs. So let's see what your true loan to value will be. $551,250 minus renovation costs of $100,000 is what? $451,250. Don't lose me just yet. Let's just look at that purchase price again. $500,000. What's a 10% down second home loan on that? That'd be $50,000 down. That's $450,000. Look at that red number, $451,250. So technically, you could get a loan up to $451,250, $450, which is what? 10% down of that purchase price, because the ARV was 75% of your purchase price plus renovation costs. Okay. So this is how people are getting that 10% down. You don't have to understand the math. That can be up to us. This is how you can calculate it. If you want to take a screenshot, you can do that and figure out the math of behind it and how I did this. But basically, you are going to do this backwards as a consumer, as a borrower. You're going to have that purchase price in mind. You're going to have that renovation value in mind. And then you're going to have that appraised after renovated value appraisal in mind. So all you have to do is take this number of what you think it's going to appraise for, multiply it by 75% to get this number, subtract your renovation costs. Oops. And that's basically the max loan amount that you can get. So now subtract that from your purchase price, and that's what you need to put down as your down payment, whether it's 10%, whether it's 20%, 25%. Now, that's the math behind it. Result, you are now able to put down just 10% of the $500,000 purchase price to have a $450,000 loan amount. Woo! While getting your $100,000 renovation cost 100% to you. Don't need to put anything down on that. Then with a new appraised value of $735,000 once those renovations are complete. Qualifications and terms. This is property specific. So this is what we're going to go over now. I just showed you the math of how it's done, of how you just put 10% down. Yes, it's happening. Yes, we're doing some right now as we speak. Yes, I closed some last year. This is property specific. And we must have an address to know what your down payment options will be. Most high tourist areas can do as little as 10% down option. Now, if your property is in the middle of Kansas in a field, we will not be able to do 10% down because there are no surrounding comps. There are no viability essentially for that property to produce as much income as we want it to produce. Generally, these loans are a 12 to 24 month period. We will get to refinance in the next slide, so just keep that in mind. Minimum credit score is usually 680. Obviously, like a normal loan, just don't complicate it. Think of it as a normal loan. If you have a better interest rate, a better credit score, you're going to have a better interest rate. But minimum is generally standard of 680. No renovation experience needed, so you don't need your GC license, general contractor's license. You do, however, get better interest rates if you do have prior experiencing with renovating at least 3 properties within the last 36 months, give or take. So that only affects your interest rate pricing. So for example, if you had, an 8% interest rate, you might be able to get, or if you had like a 8.5% interest rate, you might get an 8% interest rate for these costs. Now, I will say these interest rates aren't pretty, y'all. They're not meant to be because they're only 6 to 12 to 24 months long. It is interest only. You're not paying principal on this. You're not qualifying off your debt to income ratio. None of that. It's just interest only to get you into that DSCR loan after your renovations are done to keep you with 10% out of pocket. You can close in an LLC or your personal name. Some investors, though, do require you to close in an LLC only. So just keep that in mind. You don't have to know that. I'm the one that will tell you that when the time comes. All states we have this product in except Nevada. Rurally designated properties. I can't read that because I can't see what it is saying. Oh, here we go. Rurally designated properties may only allow for 15 to 25% down payment depending on compensating factors such as the ARV, your experience, and credit score. This is property specific. Keep that in mind. Just because you can put 10% down on a property, beachfront property in Panama City Beach, Florida, doesn't mean you're going to be able to put a 10% down in Kansas City. Okay. Now the refinance part. Now that your renovations are done, it's time to refinance into a 30-year amortized loan. This is where the DSCR loan comes in. We will be able to refinance you at the new appraised value. Yes, we don't have to take cost plus your purchase price. We will refinance you at the new appraised value compared to what you owe. So in this case, your refinance would be a 75% loan to value. And DSCR will be your best bet since you haven't had time to show rental income and if you close the loan in an LLC. Why? You can't close conventional loans in LLCs only. If you want to close a conventional loan refinance, you do have to qualify off your personal debt and your personal income. So keep that in mind. Any remaining closing costs will be able to be rolled in since you have enough equity in the property up to an 80% loan to value. So as we know, rate and term refinances can go up to 80% loan to value, not cash out, but rate and term. And so including in that is your closing costs. So you are able to do that. So now, Brenna's magic trick result. You have successfully gotten an investment property with 10% down without qualifying debt to income ratio wise. You've had renovations fully covered with no out-of-pocket expenses. You refinance into a DSCR loan without a wait time after renovations to the new appraised value. You are still out of pocket for your down payment of just 10% down total. That is how the 10% down, quote unquote, DSCR loan works. Your initial loan is not a DSCR loan. It's just a normal purchase / renovation loan. And then we put you in a DSCR loan afterwards to get the most loan to value, as well as still keeping that 10% down out of pocket. So now I'm going to remove this from the screen. I can pull it back up. If any of you are like, can you go over that slide again where you're calculating the ARV and the combined loan to value and stuff like that? I can do that, or you can feel free to reach out to us and we can do it for you. Excuse me. Andrea, new purchase only or refi qualifies as well? This is new purchases only. Are you able to do this and put, forget to bring them up here. Are you able to do this and put down 0% if the appraisal comes in high enough? No, you need to have some type of skin in the game. If you are wanting to do that, you might be looking at a primary residence loan, an FHA. I know they do a 203K, a 203B renovation loans. And you can possibly look into that for your primary residence. This is investment only. Installation of a swimming pool considered a renovation? Sure, why not? I also am curious what renovation would consist of. So it doesn't matter. It can be whatever you need it to be. You can revamp the whole kitchen, a whole house. You can just put an awning on the porch, things like that. Your thing is you have to have that after renovated appraised value to hit high enough to put down as little as 10%. So if you're just putting an awning up on your property, you're not going to have a bigger ARV, a higher appraised value than really what you're getting right now. So for the other person that asked about the pool, you can, but you need to make sure your new appraised value will hit that 75% combined loan to value ARV. So keep that in mind. In your example, how are the renovations funded? By us, the lender. So we do draws. So it's similar. If you guys have never, I keep forgetting to pull up these questions. I'm so sorry. It's similar if you've ever done a construction loan. So I used to do a lot of those back in my day before I opened up the mortgage shop. But it's based on draws. The neat thing about this is the draws go directly to you as the borrower. It does not go to the general contractor, so you are the boss. You will show work done. So you will have a draw schedule. Let's say your first draw is, hey, I'm pulling out the cabinets in the kitchen. I'm redoing the countertops, the floors, and getting new cabinets. That's the first draw. So once you get that money in your account, you take that money, you go do the work, have the GC do the work, whomever. And then you show them proof by uploading pictures to an app, usually. And then you're like, I'm ready for my next draw. And then they show that they see that you've proven that you've done the work in the first draw, and then they give you the second draw. Seller credit is totally different than a purchase. You can go up to 2% seller credit of the purchase price without it affecting your cost basis. Cost basis means your purchase price plus cost of renovation. So if anything over that 2% sellers are giving you, I would just say don't, because it's going to take away from, you're going to have to bring that towards your renovation value that you're going to need for renovation costs, or towards the down payment of your purchase price. So again, let's say that renovation is $100,000. Sellers are giving you $10,000 over that 2%. Then your renovation is only going to be able to give you $90,000 at that point for this product. So it's really not helpful for seller credits in this situation, besides up to that 2% to cover your closing costs or some of your closing costs. I must have missed this. Where does the $100,000 for renovations come in? I'm just making that number up. Your renovations might be $56,050. Somebody else might be $73,250.36. Some might be $300,000. It just depends. I'm just giving, for simplicity purposes, numbers to let you understand how the calculation works. So in my calculation, I just said renovation cost for this property that I'm imaginarily speaking of is $100,000. What if I have a property that's already a second home loan and I want to purchase in the same area? So this question isn't really renovation wise, but that's totally fine. You can purchase a property in the same area you have a vacation home loan. That's not going to limit you. Now, the limits are if you wanted to try to get another vacation home loan in that same area, you'd have to give the underwriters a really good explanation of why you're going to use this one now as a vacation home loan as opposed to the other one. If you got a vacation home loan a long time ago on that property you already own, and you've decided, you know what, this property I want to get now is much better suited for my family and I've already 100% put this other one as an investment property, then you'll have more of a likelihood of getting that another vacation home loan in that area. Or worst case scenario, you would just put 15% down investment only in that area as opposed to a 10% down vacation home loan. But you can have as many properties in one area as you want. If it's only new purchase, is there a time limit since the purchase happens? So yeah, we do the purchase. So it's just like a normal contract. Let's say you go under contract for a purchase and you need a loan for it. You don't get that property until you close the title and the loan funds and all that fun stuff. Same thing. You go through us for the purchase and renovation. For you, so you don't get confused, just think of it as a normal purchase and you just get a lender to do it. Lender being, we'll do it for you with the renovation costs and everything like that. And it closes the same way as a normal purchase. Can you repeat? The payments all the way up until the DSCR refinance is interest only? Yes. So interest only on your loan amount and whatever you draw. So your loan amount is going to be the same no matter what, right? Let's say it's $450,000. You're paying interest only on that. And then you're paying interest only on the draws you accrue. So you're not, let's say, again, it's $100,000, but you only pull out $30,000 for your first draw. Well, you're paying interest only on $30,000. Then let's say your next draw is $30,000. Well, that equals $60,000, right, between the two. Now you're paying interest only on $60,000 for those renovation costs until you're done with your renovations, and then you refinance out, obviously, into a 30-year amortized loan where you're paying the normal payment. Pay closing costs twice. What about other fees? What if you have stellar rental history? History doesn't matter. Closing costs twice. You will pay closing costs the first time. The second time, you will be able to roll them into your loan amount. So you don't have to come to closing with any closing costs. That's why I mentioned 75% LTV. You're already there because of the new appraised value. You've got 5% to play with now to add into your loan amount, so you don't have to come to closing with out-of-pocket expenses. What you want to make sure of with this is that new proposed payment for that refinance, including your closing costs rolled into that loan. Make sure your cash flow, your proposed cash flow, is still working on your pro forma. A lot of people are like, well, I don't want to roll that into my loan because my payment will be, $300 more a month. Nope. I just did one on a very high refinance loan amount yesterday, and the payment was only going to be, was it $68 to $93 more per month? $68 more per month. If you roll that in as opposed to paying closing costs out of pocket for a refinance. So keep that in mind. Let's say I buy a cabin at $600,000 and I want to install a pool for $100,000. I think the ARV will be $875. So you're saying I can potentially close for only 10% down, and the lender giving the bridge loan will give me the $100,000 up front for the renovation, so I don't have to come out of pocket for that. Yes, except the last part will be through draws. So it depends on what your draw schedule is. If your first draw is only $50,000, you're only going to get $50,000 for that first one. You prove your work, and then you get the next draw, whatever that is. But yes, this is essentially correct. If the property area is rural, though, it just depends on specific property address whether they'd want 10% down. If we're just looking at numbers' sake for what you just put here, yes, you could do 10% down on this if my math in my head is correct. Okay. What are rough interest rates looking like before the refinance interest only? Not pretty, because it is a renovation loan and it's a short-term loan of 6 to 12 to 24 months at most. You're going to be in the 10% range to 10.5% to 11% interest rate range. But keep in mind that is interest only. If you want to figure out how to get that payment, you are going to take, let's say it's a 10% interest rate, times that to your loan amount, divide that amount by 12, and that's what your monthly payment will be. Interest only. What are approximate interest rates on these before? Oh, same question. All right. How quickly are the draws released once you've provided completion pics from the first draw period? 24 to 48 hours. Pretty good. Excluding holidays. So remember, federal holiday, it's the same as a bank. Like you can't get a wire at your bank on a federal holiday. Is there a purchase price limit? Yes. Minimum purchase price usually is $100,000 for most of these investors. So just keep that in mind. If you have any other questions, put them in the chat, whether it's about renovation. I know we had one that was just about, can you have another property where your vacation home loan is? We can talk about all of that. What is the best way to check appraisal value before and after renovation? So you can actually so you looking to purchase a property, you want to work with a reputable realtor in the area. And you want them to say, hey, obviously this is the purchase price now. Let's say it's $200,000. I'm going to make these renovations. what do you think that it would appraise for based on your comps? So let's say I'm adding a pool. Let's say I'm clearing trees to have a mountainous view. Pull me comps that have the same amount that have sold in the last 12 months. And that's how you go, how you base it off of that. You can also get an appraiser's opinion. I don't know what they would charge for you to do that, to get an appraiser's opinion. But obviously, we also do an appraisal on it. If you're way off, then that's going to put you in a bond to put more down once we get the appraisal back. But we do appraisals on it, like a normal appraisal, to see what it will be when you make those renovations. How do they determine the draw schedule? That is basically up to you or the general contractor that you're working with. So if you aren't licensed to do major renovations, you will want to get a quote from a general contractor. Again, you're the boss, so they're not directly getting the draws, but you are. And you'd say, okay, $100,000, what first needs to be done? Usually, they'll allow a 5 to 10% draw for the first draw at closing. And then you base it off of work done, completed, and how many draws, or how many, I guess, chapters essentially would need to be done for those renovations to be completed. When putting the initial 10% down, you don't need to factor in DTI because you know the end result is a DSCR. Yeah, you're not, it's not based off of anything because it's such a short-term loan that you're going to have to refinance anyway. The loan is going to be due, let's say you pick a 24-month period, let's say 12-month for quicker service. At the end of 12 months, you got to pay that whole amount back. So it's essentially ballooning until you have to refinance into it, just like a construction loan. If it's not a construction to perm, if you do a construction loan, it's going to balloon and you have to refinance into a normal loan. But to answer your question, correct, it does not go off your debt to income ratio. Can the terms be applicable on new construction on land currently owned? Yes, if you are a general contractor yourself or have experience renovating or building ground up properties, at least 3 in the last 36 months. You're getting into the new construction loan territory. You may be better off at getting just a normal construction loan at a bank as opposed to this type of loan. For the initial step of estimated ARV, can this come back to bite you when you go to refinance at the end if you miscalculated? No, because we're getting an appraisal on your first purchase. We're getting the appraiser's opinion that says, subject to completion, appraised value. This is what's going to be. Then for some reason, let's say we get another appraiser and they suck and they give you a low value. Well, we have this appraisal that has been part of a loan that is now usable, and we can say, hey, this is what they showed. These are the comps. And so we would be able to fight that and either get that thrown out or do a reconsideration of value or order another appraisal. Yes, this is recorded, and we will be posting the replay link. You can just watch it once it airs on Facebook. It'll just replay for you if you want to watch it. YouTube will actually have a link, and I will post that in the comments as well as the event page on Facebook. If you're watching from YouTube already, you just rewatch here on our Financing Short-Term Rentals Facebook page. And that is that. So while I wait for any other questions or comments, I'd never introduced myself in the beginning. I'm Brenna Carls. I'm the CEO and founder of The Mortgage Shop, where we specifically specialize in short-term rentals, long-term rentals, and vacation home loans for you. I am also the founder of Financing Short-Term Rentals. If you're not on our Facebook page, join our Facebook page. If you look up at my top, I don't know if it's mirroring, top right or top left, it's the kind of like Miami Vice looking Financing Short-Term Rentals. Just search that in Facebook, and we are that group. That is my group, and I answer all questions in there for you. I have a team of loan originators behind me, so it's not just me. I have multiple people helping that know the same knowledge as I do that are helping you as our clients get your loans. And yeah, that's who we are. If you have any financing questions related, you can post them in our Financing Short-Term Rentals Facebook group. You can come back here and comment, and I'll see them and and be able to answer you. We do have more questions in the comments, so give me 2 seconds. Can I do this one 2 homes at the same time? I don't know if you meant, can I finance 2 homes at the same time? But yes, you can if that's what you meant. We just have to, if you're doing conventional loans, we have to take into account the monthly payment on each, and we'll put them in each of those loans to mirror your debt to income ratio to make sure that they are equal and that you can still qualify for both at the same time. If you didn't mean that, maybe put your question in. My admin put in the comment, financing short-term rentals Facebook group, and then you can look at the comments and see that. If you don't see that, literally just search in Facebook financing short-term rentals and it'll pop up for you. Does this apply to single family property only or any type? They can go up to 2 to 4 units residential, but anything else they would not be able to do. Is Lloyd still with your company? Yes, Lloyd is. And I feel like Oprah or Montel Williams or whomever that had those like telethons, they are waiting for your call. Call now. But yes, Lloyd is with us. He's currently doing another fix and flip as well. Well, fix and hold, I think his client is doing with one of these. So he's well versed in it as well. So if you've been working with him, reach out to him as well. I'm going to show some information if you want to get in touch with us. If you want to set up a call where you have to schedule a specific time, just go to mortgageshopmlo.com and schedule a time specific to you. If you're just like, I need my questions answered right now, call us at 800-816-7982. Operators are standing by. Call now. But my loan originators, my loan coaches, I should say, are waiting for you. And just as I'm answering your questions, they can help you as well. And then if you'd rather email us your kind of situation to see what it would be for you, it's info@mortgageshop.co, not .com. Don't make that mistake or we will not get your email. And then if you want to follow us on Instagram, I give weekly market updates and actual what's happening instead of the mess that you see in the news, and how it relates to you as an investor, which means how it relates to your interest rates. That is my primary focus on this page. It's financing.short-term.rentals on Instagram. And I will give you weekly updates. I will also let you know of any Facebook Lives that are coming up. I'm going to be doing them every Tuesday at 4 p.m. Eastern. And let's see. Let's hide the banners again. We've got a couple more questions, I believe. Condos. No, we do not do the renovation loans on condos. Can improvements be furnishings? No, because your furnishings will not add to your appraised value. It has to be something that's going to add to your appraised value to have that ARV be higher in the first place than what it's originally appraised for. Next week, the Facebook Live will be good debt versus bad debt. And I'm going to quickly explain to you what I'm going to teach you in that. So that's going to be where there's good debt that makes you income, where you can expand your portfolio as quickly as possible. And then there's bad debt. That means that it's not helping towards your income and it's hurting your debt to income ratio. This is going to skyrocket your ability to get more properties quicker. And I'm going to teach you how to get that bad debt off of your name, keep good debt in your name, and we make a plan for the next 3 years for you. So I'm going to go through all of that next week for next week's Facebook Live. Will this be available for rewatching? Just logged on. Yes, this will be. You will be able to see it replay live in YouTube, replay live on Facebook. If you have that Facebook event pulled up, I'll copy the replay links in there for you. So you'll be able to rewatch this and go through it in case you missed a section, or if you had a question on a specific topic that I went over. Are you offering this loan in Texas and Utah? Yes, I am. The only state that we are not able to do is Nevada. I usually say Nevada, but I hear the proper way to say it is Nevada, so I'm just saying Nevada. Keep in mind it's property specific, so it doesn't mean every time you're going to be able to put 10% down. It might be 15, it might be 20. So just keep that in mind. Does the DSCR loan discussed in this video report to credit bureaus? It can and it cannot. If it's your personal name, then it will probably report to your credit bureau. If you close in an LLC, we do true LLC only DSCR loans. There have been many to claim that they do true LLC DSCR only to find out when you close, guess what? It's reporting to your credit. That is not a true LLC only DSCR loan. I won't get on my soapbox on that, but we do offer actual true DSCR LLC only where it will not report to your credit and will not be counted against your debt to income ratio. So hopefully that will answer your question for that. Any other questions? Feel free to drop them in the chat. I'm going to stay on for about 4 more minutes. I try to limit this to 40 minutes so you guys won't get bored and you get as much information as you can as quickly as possible, and then get back to your families and get back to cash flowing. If I could qualify for a vacation home loan, will that offer better rates and terms? What about renovations? Better rates and terms than what? Your vacation home loan will have better terms than, a renovation loan. Most conventional loans will. Our 15 and 20% down investment only have much better rates than the 10% down second home loan. Our DSCR loans have really good rates right now. I just quoted somebody, I'm locking them in at 6.875 today on a DSCR short-term rental purchase. So yeah, it just depends on your personal situation. So you can feel free to reach out to us. I'm going to put that banner up here if you want to email us or if you want to call us. The LLC DSCR, are they usually a higher interest rate? They can be about 0.15, 0.125 higher than the one that can be in your personal name. So Cheryl, yes, you want the one that I quoted you today because it's going to be the best terms and the best interest rate for you. All right. 2 more minutes. Any mic droppers? Anything that y'all want to say? Brad, what is the PPP fee, which means prepayment penalty? If you guys don't know what that means, there's no prepayment penalty on a renovation loan. For DSCR, you can range from no prepayment penalty to a 5-year prepayment penalty. It just depends on which product you need and specific to your needs. 2 minutes still. I answered that in under a minute, which is cool. Recap of our products: 10% down second home loan, 15% down conventional investment, 15 to 20% down DSCR loans, 20% down condo-tels, which we have now, 20% down non-warrantable condos. This 10% DSCR loan, or what people say that it is, but it's a true purchase and / renovation loan. Trying to think of anything else that we do. Most everything that you can think of. HELOCs. We now have HELOCs on your investment and second home loans. Most people do not. We now have HELOCs for DSCR, guys. 80% combined loan to value HELOC DSCR. 80% combined loan to value cash out refinance DSCR. We have all of those products for you now. When I say we are investor heavy friendly, that is what we do. We are trying to find the best products and deals for you as investors to make your cash flow dreams possible. So with that, I'm going to let you guys go. I will post the replay link and all of the outlets that we are on. If you have any questions come up, let me know, and I will talk to you guys next week at 4 p.m. on Tuesday. See you guys.